that should be okay. Probably I should be able to present both things. Let me see if I'm able to present and you guys are able to see that. Are you guys able to see my screen now? Can someone confirm? Hey Joel, thanks for joining in. Perfect, perfect. Yeah, yeah. Just a small request: keep yourself on mute if you're not speaking, because there's so many people joining in, and if it gets around, I'm pretty sure it may get noisy very soon. So yeah, let's keep it to that, and probably I'll give 2 more minutes before I start. Okay. See my screen right. Okay. This recording session most likely. मैं चाहे तुमको नहीं दिख रहा था, जब हम प्रेजेंट करते हैं ऑन करते तो दिखता है मेरा वीडियो, राइट?
नहीं होता है तो रॉबिन हुड का तुम ऑन करके रखो वो वाला पेज।
नहीं नहीं, दैट्स फाइन, अभी तो टाइम है। पहले क्या है समझाएंगे, और कुछ बेसिक इंस्ट्रक्शंस कैसे क्या करता है नहीं करता है, वो ऑप्शंस क्या होते हैं, that will explain, and then I'll come to that, how to do it and few other things, what all I look into before I decide.
I'm trying to wrap up in an hour.
Yeah, yeah,
अगर
yeah.
होएगा तो बोलना कि हाँ भाई we can maybe do it later.
हाँ,
नहीं होता है तो तुमको अपना वीडियो, अगर तुमको ज्यादा एंजाइटी लग रहा है, वीडियो नहीं ऑन करोगे
नहीं
क्या?
नहीं ठीक है, I'm fine, I'm fine.
कि बिना वीडियो
नहीं
करो।
नहीं, I'm good. It makes like more sense to speak to one video. No, no worries. Okay, so probably it's 6:36 now. We'll start. Thanks everyone again for joining in. I'll try to keep it simple, for probably assuming that you just guys know what option is. I mean, probably you have heard of the word options, and probably the risk it may have, and the returns it may give you in a short time. Uh, I'll assume that to be the core group structure for most of the people out here, and I'll probably start from there. In case I'm going too slow, just drop in a chat. If I'm going too fast, drop in a chat, or speak up. I'll try to moderate the speed. I don't have any presentation slides for today. I just wanted to talk through things, show you out something on my Robinhood app, and a few other things, how it works, what options probably you'll see, and something of that sort. So yeah, here it is. So let's assume, when we're talking about stocks, we know, you're looking for an ownership in a company, and you get a very small share of ownership into a company, and if the company is doing good, or the perception is the company does better, the stock price increases, and that's where how you earn it. Similarly, you have an options, which is not a stock that you own, but it is a contract. Let's assume, for you have a house, somewhere, and the current market price is 1 million. Let's suppose, I mean, you had a house in, Mountain View or Mountain House, and for some reason you assume that probably in 3 months down the line or 5 months down the line, there's a major development coming in. You can foresee that happening, or with the COVID and everything, you people have moved in to different areas, gone to a bigger house, in the suburbs, and probably, you expect that the market price will increase, tremendously, or will it will go on to the north side. So what you could do is, okay, and there are some houses put on sale. So probably, you don't have the money to buy the complete house right now. Probably you don't have a million, but you probably have 10K. What you could do is, okay, you can put that 10K as the deposit. uh get sign in a, early contract that, okay, probably guys, I'll be buying this house for a million, but with the idea that, okay, the house prices increases from probably a million to 1.5 million or 1.2 million. And let's suppose that happens, the house goes from a million to 1.5 million, just hypothetically. I mean, in 6 months time, probably it may occur in some very, specific areas, maybe not too much in US, but in, let's suppose, India, the house prices, or property prices can move that abrupt at times. If there's a major development coming, let's suppose you have a new metro line is announced through a housing society, or there's a major park coming in or whatnot. So what would happen is, you would have two options, right? You just paid 10K for the deposit, right? And the prices have moved from, a million to 1.5 million. Either you find someone, or either you bring up the money to buy the complete home for a million, and then still, sell it the next day for 1.5 million, still making probably, close to half a million profit. But let's suppose you don't have the funds to, really book that house. In the first time, whenever you, even went into the contract, you knew that, okay, I may never be having the funds to buy the complete house, but probably that, okay, this price, that what I'm looking for is surely gonna go north. I have a very strong conviction about it. And if the house moves from a million to 1.5 million, if I can find a buyer, who is ready to buy it from me at a mix, at a mid price of this, let's suppose, 1.3 million, or even for 1.2 million, right? So imagine, just paying 10K, you're selling something which you don't actually own for 1.2 million. So you made a big amount of, profit from that. That is what an options contract does. So let's suppose, you have a stock at price at $100, and you assume that, okay, this price will go to, 140 or 150, whatever dollars you want, you think, the price target is. So that is your target price. And then, you pay a premium for this, which is the, premium amount, or the booking amount that you give. So if you calculate that, even if, the price has increased even a bit, if it's in the north side, the price of the stock, relatively, if the price of the stock moves only probably a 2% 5%, the relative move based on, the amount you would gain because of that multiplying factor, because you're holding minimum 100 contracts. So a contract in an options trade would be a multiple of 100. So I'll probably show you, quickly from my uh, Robinhood account as to, what it looks like, and probably I will go from there. Let's see. I'll show you quickly two of those. Wait, let's see. So yes, yes, yeah. If it is, related to what I just talked about, yeah, go ahead. Yes. Mm-hmm. Yes, you can always. Yes. Mm-hmm. Yeah, no, go ahead. Go ahead. Go ahead. Mm-hmm. 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 No, 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 no. No, no, you are just trading with the premium price. So just okay, let me put, I'll probably go through this and probably you'll see what is happening. Okay. So let's suppose I just brought this contract probably probably a day before or so, 25th. Yeah. So I brought this options for 3.7, was the price I paid, and I bought two contracts, right? So I paid $740 for this frog contract. Uh, so JFrog, I brought it assuming that I bought a contract for $85, saying that okay, this shared, I'm hoping that will reach up to $85 in so and so time. Let's suppose it is, yeah, by 15th of Jan, I'm hoping it will reach to $85. Okay. But even if, let's suppose I, the point when I brought this share price, right, it wasn't even $70. Currently it is $70. Probably I brought it 25th, and let's suppose on 25th it was, yeah, I brought it somewhere when it was like, I guess $64. Okay. I bought the stock or the contract when it was $63 or $64, let's imagine, and today it is at close to $70. Now what happened was I said okay, I'm buying two contracts. Now because the price has gone in the direction of what I predicted, my value for this contract has gone up. If you see, this was the when I brought it, it was somewhere here. Let's suppose I bought it for $3 or something, right? I brought it somewhere here, $3.6. Okay. And since then it has gone high up to close to $5. Now at this point of time, if you see, my profits are not too great. I was just trying to get into something. I just have two contracts, but the price movement for frog in probably last one day has been 4%, but the profit that probably I'm seeing right now is close to 20%. Correct. At this point of time, I'm not still owning the shares. So if I do a trade and if I want to sell this out, right, I can sell this contract right away. So I don't need to actually garner the funds to first buy this stock and then sell it out to someone. So at this point in time, all what you're doing is you're having this stock, a contract for this stock, at to buy at a price of, uh, you can buy it at price of $85, right? Even if whatever it moves to. But because the movement has been in your direction, I can easily sell it right now and book probably 20% of the profit. But what happens is, if I excise my contract, right, if I excise my contract, I would, my for me to get to an even price, I have to go to this break even price, the price you see, right, $88. This is the price that you have for the $85 plus this premium cost that you paid. So for this, let's, so there could be two ideas, right? One, you generally wanted to buy this apartment that I'm talking about, but you don't have the funds right now. Okay. You generally want to buy the apartment, and you're trying to go through a loan, gather the funds, and probably you paid the premium, and then you're trying to accumulate the $1 million for that apartment. Correct. So then at that point in time, you're paying 1 million plus the premium amount. Don't think premium amount to be part of the complete payment, but it's an extra cost that you are just giving for holding it and paying it for a longer duration, and a contract saying that okay, your price is locked at this level. So if you had to excise this contract, so what you are saying is the excising of the contract. So when you excise this contract, that is when you would come in a picture where you have to equate all of this. But most people, what happens is excising a contract will mean that it has to rise very steeply, and you wish to own that stock at the previous price. Let's suppose there's another stock which has moved tremendously, right? Let's suppose let me see if I can show some other stock to you. Just one second. Uh. Yes, correct, correct. Yes, that's right. Yeah, true. The only place, when I have done, probably, it's an, very edge scenario where I had, very strong conviction on Slack. It so happened, and it has moved pretty, quickly in the last couple of days. I was losing on the contract value, significantly. My contract was, probably I was losing, uh, I would have ended losing all my premium, but I was still very, very bullish on Slack. So I, exercise it, and thankfully, it turned in my favor. It has gone 24-30% up, so I've covered for all of my premium and everything. So I was expecting some news to come in, not exactly, knowing if it will be in my timeline. It happened just probably 3 days after, so I was lucky over there. But yes, exercising the contract is very, unheard of in the options trade. Very few people do it unless, you are very bullish, or you really have that fund. So imagine, if I'm trying to exercise these contracts, right? So the amount that you'll end up paying is pretty high. So it's like, let's suppose this is two contracts, right? So it will be, the uh, $6,000 I would have to pay for, excising these contracts, right? For two of those. So my break even price is 3180. So I'll be paying this much. Then it will be, it will be just breaking even. You are not making profit unless this goes beyond this price, because, current price is also 28%. But if you see the percentage profit that I'm having, probably holding over here, again, this was some of, a trade someone else, suggested. I wasn't tracking Asan, very actively. I do have another set of probably, 100, 200, I mean 50 or 60 companies I track more actively, where I believe, okay, they are good companies, market leaders, or, tremendous growth opportunity. Some very high risk companies, again, those are like, lotteries, or probably, where I spend, less than, 5% of one of my options trade. So I try to keep it, 80% into stocks, and, probably 20% into options. And the profit that I get from options is what I move back into my stock profile, let it grow, and then again, from the core value that I have allocated for my stock, options, that is what I try to, grow. And then, that has given me good returns that way. So I'm trying to, go from both the perspective. So probably, if you see, currently I have balanced it out. Probably it's not, really, 20%. I have booked a lot of, options this week, going to the Thanksgiving week. But yeah, generally this is 20%, and this is, 80%, and probably somewhere else here and there. So that's what I have been trying to, keep it so far. And yeah, that works pretty good so far. Any questions so far? So on the evaluation? Yes, sure, sure, go ahead. True, true. Yeah. Correct, correct. Mm-hmm. Correct. So yeah, so if you see here, right, I have a Tesla, Zoom. Yeah, so I have Zoom. Probably if I have to excise this out, right? So that means 100K. So probably that is close to my all the, trade that I'm having, in one of the applications, right? So if I have to excise this out, that will mean, if I've got two contracts, that's like almost 100K that I have to, have just for one stock. So that will be complete. Your profile will get complete, skewed to one of the companies, which is not a very good position to be in. But you are bullish that, okay, this company would rise. When you are bullish on that kind, that is when you want to go into an options contract. You're bullish that, okay, this company is gonna go up, or probably, and for starters, probably I would only, suggest going with a call option, not with, put and everything. Those are more riskier. Here the max probably you could lose is the amount that you paid, the, options value, or the premium. That is the max value. Or imagine, let's suppose, you had bought this, you had, unlimited funds, and you bought, 100K of shares of Zoom. And if that goes down even 10%, right, you are losing probably, 100, 10K. But here, if, if it goes 10% or 20% down, the max you're losing is $5,000. So let's suppose, Zoom had a major, I guess it fell down pretty, quickly, right, at one of the trades when, the vaccine was announced. Probably, let's see. Yeah, so this was a steep decline, right? From, let's suppose, yeah, close to 30% decline. So imagine if you were holding the actual stock, I mean, you would have lost 30,000. But here in the options trade, even if you were holding the options, the max you could have lost is, 5,000, right? So that minimizes your risk if you're going for a call option. That okay, the max amount that you can lose is the premium that you're paid for. And again, similar to what you do for stock, you can average out your options also. I mean, I did that probably. I bought this options for $46, and then average it out. I was still hoping towards it will rise up towards the ER, and probably I'm right now onto break even. So yeah, I got it at the wrong time probably. This is one of my bad trades, I would say. But again, I'm just showing you, to understand that, okay, things can go bad. You can be, it's bad to be too optimistic in the options world. At times it pays off. Probably here it paid off. There are multiple places where I have lost probably 5,000, $10,000 in a single trade. And again, the value, or the money that I have made at times is also that much. I mean, there have been stocks that have given me probably 1,400% return, or something around more than that, and probably 5% also. And then there have been so many trades that I have where it has went down from complete. I have lost the complete premium of $5,000, $10,000 also, especially through ERs. I played ER for Zoom once. Zoom worked. Sorry, I played ER for Netflix. Didn't go my way. I played ER for PayPal, I guess that didn't go my way, and Microsoft did not go. So even the thing is, option trade is a lot about timing also. So one thing that you have to be very cautious about is the uh, you know sorry, tailwinds and headwinds. So if you have a lot of tailwinds, and you don't see a headwind that would stop the rally, or don't see anything coming, probably that is when you want to be more optimistic of going to contract if you're starting new. But otherwise avoid, or take into very small slots with the smaller companies where the premium that you're paying is very small, and if that doesn't go your way, you would still be okay to survive with that single trade or whatnot. So you would probably like to start very small on some of the smaller companies, or a high volume companies which have been pretty constant. So let's suppose Costco is one of the companies, right? It is more than expected to grow because of the COVID and everything. You know that online commerce is gonna grow, right? Come one way or the other, and that's a shift in the behavior also. It's not a one time thing. Probably Zoom may become a one time thing. um, in future people will not be doing so much of Zoom calls and things, but uh, I don't think that will be the case with e-commerce, and things will reverse a lot. Few of those people will probably start going to malls and everything. But just it's just my perspective. Probably it's not necessary everyone to agree to what I'm saying, but that is one way of things. And again, yeah, keep your contract small. Start with a smaller company. See, one of the tools that I generally use when I'm trying to go for one of these things is, let's suppose I'll show you. I have a very simple app that I use, Stockhood. So what it does is, for any company that I have, I can probably go to my watch list. Let's suppose AMD, right? So one thing I try to check is for the analyst ratings, and see what is the price target that they have given. So at this point of time, right, the current price is almost higher than the highest price that is any analyst have given is like $100 for this. The minimum is $13. Forget about it. Probably a pretty old one, but the average is 84. So if I try to buy options only when either I'm really bullish on that company, I know a lot about it, I have more sources, or some of the other way of getting into that, or the price range is below the average price cost or average price target for this. Let's suppose I don't know if Baba is where Baba band is. Let's see. So yeah, for band, right, the average price target is $183. Currently it is trading at 150, and the lowest is 140. So if probably whatever knowledge I would have, the analysts are supposedly, gonna be more, that's their day job, right? So they would be knowing more. So I assume that, okay, if this is the runway they have, probably it will land somewhere very soon into one of these spots from 150 to 180 to probably 225. So probably I can go for a option straight into this. But I try avoiding anything which is beyond the max price target or even the average price target. Only in few companies, probably Tesla is one of the exceptions where people get it wrong, and it's a rally which many have found it hard to explain. So that is one where you may not see those ratings. The price target may not be, only probably a couple of people would be rating it high. So if you see here, the price target is almost beyond what is the highest price so far. So 560, and it has already crossed that price. Correct. So that is where I mean, and then this app has few other, probably let's see, where it is, ratings. Yep. Oh, sorry, not ratings. Over here. Yeah. So this gives you, which company, what stock people have recommended. And sorry, your voice is breaking. Whoever is speaking, I'm not able to hear you. Can you come again? Uh, No, 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 no. This is not a paid subscription. It is just trying to accumulate data from various sources. No ads, nothing. Very simple. So you could probably find all of this into other apps also. It's not that you cannot find it out, but it's pretty clean, simple. Does only few things. So whenever I try to go into an option state, I surely check it out. So based on even recommendations that I get in the group, if I am bullish, if Vin or anyone else, or Ajay, or there's so many great people in that group who are recommending, I generally double check before directly committing to it. Most of the times it has been right, but because it's my hard money, I want to do my due diligence. So probably over here, right? If you see, the price target is 60, so it's a 51% premium from the current price. So each company, they will give you a price target based on the recommendations that have came recently, based on the stock performance or any metrics that the company would have published, or the behavior that company is going through, or one or the other things. So let's suppose for Nutanix, right? The up, I'll share that. It's Stockhoot, I guess. Let's see. Yes, Stockhoot. So these are the couple of apps that I use: Yahoo Finance, CNBC, Seeking Alpha, MarketWatch, Stockhoot, TipRank. So again, they're not just one, they're multiple things. But probably recently, this has been my one of my simple and favorite app. Very clean, very simple. But this is what I generally go for options trade. And again, you can, I mean, these are lists probably you can find on most of the apps. Not a big deal, but probably the way this interface is pretty simple. This gives me a second opinion before I make a trade. Especially if I'm going in an options trade, I want, if I'm not 100% into a company, not sure about the company, I if I cannot speak about a company for at least 5 minutes, then I would surely go by this. Otherwise, I can probably take someone's recommendation. Let's suppose if someone is saying that, okay, this is the support level and this is the target level for AMD, Nvidia, Tesla. I know those companies in and out, probably, or understand what they do. But for a company which I do not understand, probably this is where I'll go first. Check out what the price targets are, and if it is beyond what the I mean, what analysts say, I would probably try to skip it out. So in option trade, it's more about avoiding the losses. If I assume the losses that I have made so far, if I would have not made those losses, or I would not have made my trade, probably I would be up another 200% of on my profile. So whatever percentage I'm up right now, that would have easily been more than 200% more for me. So that's the kind of losses you could get into an option trade. So start very small, take into companies where you have a big runway to go, and it does not have headwind. So headwinds is like Zoom is one of the companies where you could the moat does not exist. So I was talking about Slack the other day, right, in the group, that it does not have a lot of moat. But luckily, if it goes with Salesforce, probably it will have a lot of marketing capacity and other things where Salesforce can integrate it to its apps and whatnot, and probably that will be a good one. But otherwise, Slack does not have a mode, Zoom does not have a mode, Boeing has a big mode, Apple has a mode, Google has a mode. So look for those companies where it does not have a lot of headwind which can derail your direction of the companies. Neo at this point in time does not have a moat. Tesla does have a moat. It is by far the leader in the EV sector. Again, I'm a pretty bullish guy on Tesla. There are other people in the group I know are much more bullish than Tesla. They probably are gonna be owning roadsters or whatnot from the money they have made. But yeah, that's how it is, right? So that's where this thing is. The other app probably I use, again, I'm not too much into graphs, but if I go by a graph and everything, probably I use Webull. Webull, you get in subscription. You all get all the advanced features if you have $1,000 or more in this. So I don't use Webull a lot for my trading, but this just because some of the graphs and the tool is much more advanced than Robinhood. I use that. From the tool perspective, probably I'm planning to move away from all of this to maybe Charles Schwab or TD. They're anyways gonna be combining very soon, but that's where things are. So that is another tool that I use. So yeah, that's all that I had to start with. I can take few questions and probably I can, yeah. Yes, true, true, true. Yes, yeah, yeah. That's correct, correct. That's correct. And probably you'll have to, spend much more time. So and there's a lot of emotion going in because once you start seeing this, or you'll see, oh, you're making 100%, 200%, which is like unheard of if you have just been in the stock space, right? 100% is like very rarely you'll see 100% profit, right? So you will start. So that is where you have to control your emotions, because seeing easy profits will probably push you to overcome it, which will not be in a good position. So yes, time is a very crucial factor. I'll give you just one example. I remember, Roku was one of the companies. I had a call with one of my friends, Anshuman, probably, I don't know if he joined this call, and I was very bullish on that company that, I am expecting analysts to raise the price target and everything. I was like, I explained to him all the rationale that, okay, this company is very solid. It should get a price and, analyst upgrade and everything. I bought an options for whatever date, and the option expired. It did not reach the price target. I lost probably, $3,000. That was my first option trade where I lost everything on it. And just 2 days after that, there was an endless upgrade, and the price shot 20% in just one day. So that was, I was more bullish, and probably I could analyze the market better than an endless upgrade, but it did not happen in my time frame. So you may be bullish on an, so for a stock, right? If you buy it early, you have time. Time is not a factor. You can hold it for longer, and even if the price moves at a later date, you still make profit. But if you are into an option trade, yes, you want the price to move by that particular date or before that. If it moves after that, you're gone. You lose all the money. So yes, time is of so much essence, and yes, you have to track it every now and then. Yeah, sure, sure, go ahead. Mm-hmm. No, 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 the value. Yes, yes. So the first thing first, okay, don't think of exercising the options. The money that you're trying to make is on the premium. So I paid the premium of $9 over here. Sorry, $6.9 over here, right? For each contract. So I paid, $690 for this. I had other options for Twilio. I booked a lot of profit. This is just one that I've left it to run away. Because the date is pretty close, right? 12/11. So you don't know, if there is a news that, start, let's suppose tomorrow, you have the vaccines rolled out, right? All the cloud companies will probably tank. And because all of this is related to so much news, and let's suppose Trump does not see it, or for some reason, let's suppose, the result is reversed in one of the states. So those things will probably, there are unexpected changes. They can come at any point of time, or whatever could happen. So that is risky. So you don't want to exercise this option. If you exercise this, that means you're trying to buy the complete stock. And even if you try to buy, most of the apps will warn you that, okay, why it's a good idea, why it is not a good idea. The money you're trying to make is based on the premium value. I paid a premium of close to $7. The premium value is now $15. So I'm already at 123% profit over here. So if I sell it right now, I'll be probably getting, $850. So it is like a pretty good deal. I mean, getting $123, sorry, 120% up on a single trade, right? So that's what it's all about. uh mhm. Yes, buying that, yes. So if correct. So if I have to buy this, yeah, if I have to excise this, yes. Mm-hmm. Go ahead, guys. Yeah, go ahead. Mm-hmm. There are ways. Like, I don't think Robinhood has that. You cannot do that in Robinhood, but other apps allows you to sell your current option and buy a option for later trade. So it's like, just there are two trades happening at the same time. So you're selling the current date and then buying it on another date. So that can be done on other apps. Robinhood does not, I guess, give that feature. Oh, okay. Yeah. Oh, yeah. Probably I have not done that. So yeah, I haven't done that. Probably, yeah. I should have known that when I did it for Roku. I would have made a lot of money. That was my first loss, but yeah, that was a good learning. So yeah, maybe Robinhood also does. So yeah, you can probably move it to the later date. But again, you don't need to, so in option, yeah, right. Yes. Yeah. Yeah. That's right. That's right. Yeah. So generally, if you're buying for so long, right, the premium you would pay would be like tremendous. So it doesn't make sense to buy a option which is like probably a year or two away. That's like paying a lot for your premium. The price movement, or the movement on those options will be very small. So let's suppose currently, in most of the options, if you're buying it within a month or two, the percentage gain is almost 10 times the stock price movement. So if the stock price moves 5%, probably the premium price would move 50%. But if you're buying it for something that is a year or two in advance, the price movement will not be that huge. So the benefit that option trades gives you, you're losing out on that benefit. I haven't practically done that so far. I generally, the max probably I would have gone is like 4 months, 3 months. I don't and saying 1 year, 2 year is a lot in the current world for the business scenarios to change. So it's very hard to predict something very strongly that it will be a leader 2 years down the line. even for Amazon, let's suppose, Democrats end up, splitting the company, right? AWS becomes another portion, Amazon becomes another portion, again, retail, Whole Foods another company within Amazon. You don't know if that happens, right? So 2 years is a very long time to be sure about where the company movement is. It could be true for, some companies, no doubt, but then the premium price is very high for you to actually gain the benefit out of stocks from the, options trade. It's better if you're thinking long term, 2 years, probably get stocks. So I have a very quick analogy for that. So let's suppose, if I ask, how long should you boil the milk? Probably, I don't know. I mean, just asking the group. So how long? I mean, how long do you boil the milk if you you plan to consume it in one way? So how long do you boil your milk? 2 minutes, 5 minutes? Any answers? 7 minutes. Okay. Any more answers? Yes, true. So what you so okay, okay, correct, correct. So what level of heat? 7 minute, and that's the correct answer. So depending on, if you're making, a curd out of it, you will be making, just, planning to drink it. If you're making, rabdi or, mawa or whatnot, right? Depending on what your price target is or what you want to do of that, investment, your time to, boil that, or time to wait, or, time to exercise will depend on that. So it's not about just the milk, but what your price targets are, or for what purpose are you, investing. So let's suppose I'm investing to buy a house right away, probably, 1 year down the line, or I'll not be into very aggressive, stocks which may lose its value, because I may end up in a, in a situation where I have lesser money, right? But if I'm thinking, okay, I'm just investing for my retirement, okay, I can take, probably more risk, put more into equity, and then, go about it. One rule that I follow, or I'll not say follow, but I recommend most people is, uh, try to keep, at least the number of age that you have into safe assets. Probably I'm 35, so I'll put 35% of my, value into safe assets, and everything else can be risky. So each year probably I'll try to move more into the safe assets, as because I'll not have that much time to, cover up for losses. But at probably starting, when I'm starting my career, probably at 2025, okay, only 20% of my, money has to be in safe assets or cash, where I can use it for averaging out my, investments or whatnot. But as I grow, probably I'll have to move more into the safe assets and then plan it out accordingly. So that's one advice probably I give to, my colleagues or my, relatives and friends who ask me for that. So just keep that way. Probably that will be really helpful. Yep. Yeah. Mm-hmm. Uh, mhm. No, I don't think so. Just 1 second. Yeah, just 1 second. क्यों?
पूनम आ रही है समोसे देने के लिए
अच्छा ठीक है ना, कोई
रैप अप करो
ठीक है. Sorry, I don't, I guess it depends on different platforms. I don't think, Robinhood does that. It does not enforces you to buy that. It only if the the price is above your asking price, then only that, and you have enough funds in your account, that is when it does that. But if your stock price is, the stock price is less than a strike price, it does not enforce you to buy that stock. It will, you'll lose all the premium money that happens. But it is not always true that on the, day of, when the option expires, the value would be zero. I mean, I have stocks which I have traded on the last day, especially stocks or something, and they have given me good benefits. But it's a very risky option. advise not to do that. It has turned out good for me a couple of times when the stock has been rising up and up again. Let's suppose for Twilio or some other things I am holding for 1211. I had some options that were expiring today. I sold a couple of those, and I made good profit because today also was a bullish market. But it's not a good advice to be doing that unless you have been experienced, you understand the market, and you're really very bullish on it. Don't wait for the last week or so unless you are trying to cover for loss and you are still very bullish. Have a strict stop loss, probably 20%, 15%, or if you are very very bullish, try to average it out. I was bullish on Zoom. I bought the first trade for $47 premium. I got the other one at $7, and then my price came somewhere between. It came to like $18 or something, and now it is like $20. So I made some good profit over there because I was still bullish that okay, the cases are rising, stores and sorry, I mean states will start closing again, and probably Zoom will again, even if they have announced the vaccine, getting into production, getting it in people's hand is at least 2 months down the line. So these most of these stocks have been COVID play, right, for one way or the other. So I mean, but with the news coming one or the other way, it can swing like anything. So you have to be I mean rooting for vaccines or a delayed vaccine or whatever. But yeah, with COVID into play, the movement has been mostly upward W's, but you don't know if you're has it reached that point where it will again drop down or it will again rise. So yeah, it's been a risky play, but yeah, I mean with more volatility, people have made more money and lost more money. So that's where things are right now. Excuse me. Okay. Ooh. Hey Manish, sorry, come again. Oh, tax. I don't know, frankly. It is most gonna likely be a short term gain. Someone else can speak to it, but I don't know. Frankly, yeah, yeah. So option trade, yeah, options will most likely be options unless you're buying into 2 years contracted or something. Yeah, right, right, right. Yes, yes. So yeah, yes, yeah. You can. Yes, similar to options you're doing on stocks, you can also do on yes index funds and other ETFs also. Yes, that also works the same way. So if you are not especially bullish about the a company in particular, but you know that the stock market is gonna go right, is generally rising. That's how the world is, and especially after a a slowdown or all of this. Probably yes, you could do that. But then yeah, I mean it'll come with its own behavior. Not aware of that. I don't trade in ETFs. I haven't gone to that situation to exercise an ETF, so I don't know that firsthand. Probably someone in the group can answer to it if they know. Mm-hmm. Mm-hmm. Yeah, it might be. I haven't explored all the various combinations of options trade. So I generally do a call. I don't do and then there are multiple more options, ways of earning from options. You have iron condor. You have few other things. I mean, which are like advanced features probably. But for this group, I thought we'll start very simple. Start with an simple call options where premiums are low, probably $2, $3, $5. Don't go for anything which is beyond that. uh, you want to check your emotions, understand how things are. You if those value drops 30%, you should not panic. Or if they go 50% up, you still want to see where they will land 50%, 100%, 200%. So you need to get your emotions right, probably in option state. That's very important. So yeah, start small and see where it goes. And yeah, that should be all. I have a hard stop in 7 minutes, guys. So I'll take some last questions. Yeah, go ahead, go ahead. Yeah, I can hear you. Go ahead, Sandeep. Yes, it is true. It is true. It is true. That is what. Yes. So yeah, if you're sorting a stock, the loss potential is very very high. You can lose. Uh, I don't know if Abhay, can you speak to that? I know you are better equipped with puts and few things. Abhay, you on call? Guys, I haven't done a lot of put, so I would not be speaking from my own experience. So I'll probably skip that question for now. We can touch base later, and I can explain you out. But I don't understand it too much to explain in very simple terms, frankly. Yes, yes, I guess. Probably, guys. I guess we will need another session for advanced topics. Uh, Again, I'm not an expert in that. I have been in options trade for probably last 6 or 7 months only. So yeah, I mean, I started investing actively starting Feb when I saw that okay, there's a I could see sense that okay, the markets will drop down very steeply, and then that will be a good point to enter. I missed out on the 2008. I was too young to participate in that rally or that crash. So I thought I'll be making best of this one. So yeah, that's when I started. So yeah, I'm also starting. I have a lot more to learn than to give, but yes, yeah, yeah, yeah. Happy to learn over here. And yeah, thanks guys. I'll stop in 2 minutes. Yes. Hey Poonam. Mm-hmm. Uh, Yes, so that I guess we can take, in the WhatsApp group itself. Probably I would say, anyways, I have a hard stop in 2 minutes. So 2 minutes is too less to speak about it. That's just general trade information we can share over there. But this I wanted to keep to option state how to and I also wanted to show how to put an I don't know if you have time, but let me just quickly share how to. I don't know if people want to know how to put an option straight, but or maybe we can skip it out. I don't know if anyone wants to. Mm-hmm. Okay. Okay. Sure. Okay. Sure. Sure. I can. Yeah, so simple. Let's suppose I was trying to buy options for Visa. I know Visa is doing good. The number of API hits and most of the payment gateways are doing good. Visa being the biggest payment gateway, it's gonna be before that probably you'll have to enable your profile for options. None of the companies will give you option state by default. You'll have to go and somewhere based on the app you are using or the platform you are using, you will have to activate your account for options first. You have to answer a few questions, what is your trading experience and blah blah blah. That's when they'll enable options for you. So it's not like you'll directly have options. Once you enable it, let's suppose I go for Visa, you trade here, you'll see trade options and buy. So if I go to trade options here, right, uh, these are the few of the recommendations that they'll give you by default, as to buy a call, sell a covered put, sell debit spread and blah blah blah. But you're, let's suppose that okay, I'm looking for probably the numbers from this Black Friday event would come by December 4th. So let's suppose I'm putting for December 11th or December 18th, and I'm saying okay, I'm buying a call, right? That I think that the company will go up. So this is the premium that I have to pay. Let's suppose I think that the price target for me is $215. It will surely go $215 or easily go $218, right? Which is just 3% from today's price. So I very strongly feel that okay, it will at least move 3%. Or probably, if you see the options trade for this one, it is like 13% down, correct? So probably if I, you cannot see the screen, really? Okay. So let's suppose I'm putting, yeah, yeah, correct. So let's suppose I think, out of this, based on, I look for a price which is already pretty low among whatever, my price range is. I generally look for up to 5 to 7%. I don't want to go beyond that. The point is, it's not the price target you are targeting for. You are looking for the direction movement, because unless you are planning to exercise it out, all that you need to be correct about is the direction the price moves in. So I'm trying to, if I have to look for anything over here, probably I'll buy this one because this is down a bit more than the others. So it's 13%. So the upside for this would be higher. So probably I'll go put in this, and let's suppose I want to buy six options. So, or maybe eight options. I'm trying to look for 100 $200, and the ask price is, let's suppose, 1.5. So I'm looking to invest $1,200 for uh, eight contracts of Visa, and that's all. Probably it goes through on Monday. I hope so. I have been trying to get a couple of options. I tried at this point of time, but the price to move too fast, and I could not correct my price. I did not get the allocation for this one. If you see, you'll see the history. So yeah, I tried twice to at 2.8. It got cancelled. and then I tried at 3, it got cancelled because the price started moving. Both the times I tried to get the option. Once I tried at this point, and the other time I tried at this point. So when it hit rock bottom from my perspective, but it jumped too high for me to correct my prices. But I have again entered a price. If I get that price, well and good. If I don't, I may have to yeah, yeah, sure. I may have to again change my options value. So that is how it is. Okay, so this you see this queued for this particular date. बाहर चले जाओ ना. Okay, so yeah, that's how it is for this. And if I had to, let's suppose, sell an option that I already have, let's suppose I'm over here, right? This is an option I already have. I'll go and trade and sell. So it's just as simple as selling an option, share. I go put one of the options. I just have one of the options. So probably the price range is this. So 15.7, and yeah, you're good. And review and submit. I don't want to be doing that. I still think, probably it will go a bit more up before I want to sell this contract. I have already, I had probably four of the Twilio options. I have already booked more than 100% on most of those. So even if it I let some of my winners run. So I have already covered for 200 300% on this. So even if this does not give me a return, if it goes to zero, I will still not be losing money overall. But at this point in time, I'm risking one of the options to run much fast further away, to gain me, give me more advantage, which may not work out for me. At times it does, because I've already booked for profit on other options. So let's suppose this I got in $907. I had bought it for $17, so I have already covered for my profits over here. So this is I'm good on this trade. So I'll let it run further. Maybe 12.4, 12.5, or somewhere I'll block probably be selling this out, but not too soon. So you let some of your winners run. You stop your loss at some point of time. So yes. No, no, no. I don't. I don't. So generally, if so, I generally buy at least two options, and the first one I generally book for 100%. That's my trade. Again, there will be 100 ways of doing this thing, but my experience, I generally first thing is, okay, I don't want to go overall loss on a trade. I'll book the first profit at 100% if the premium is that place. So I'll first book at 100%, that okay, I'm covered for my loss, that okay, this trade is not gonna be giving me a loss at any way, right? If I book one of those options at 100%, right, there's no way I'm gonna be making loss on that trade, right? So let's suppose I go to Asan, right? For this, I bought it at like $720. I bought two, or how much? I bought four options, right? And I sold two of those at 880. So I've already made for my base amount. So whatever happens with this option now, I'm not be gonna go in loss. I sold at 880 was, yes, yeah, at $4, and now the current price is $5 something. Correct. So I'm still making more money on this. I can, and even the target date is pretty high. It's like Feb sometime, but I'm covered for this, so I don't have to risk that. Okay, am I gonna lose that money on this? If Asan goes up, well and good. If it is goes down, worst case, I start seeing it is kind of getting into correction mode. I'll probably sell it out at whatever profit I have. But so far the stock is rising, so I don't have any urgency to sell this off, because I've already covered for my base premium, right? So that's why I mean, that's my strategy. There might be better strategies, but this is a simplistic strategy that I use. I generally buy in pairs, sell half of it or some part of it to book my base cost premium, and then let it run my winners. And if there are losses, I generally book at 20 to 30% loss. Or if I'm still very bullish, like I was on Zoom, I averaged it out at probably 80% loss. At one point of time, I was at 80% loss in Zoom, but I averaged it out. I was thinking, okay, I had probably 1.5 months at that point in time. I was hoping that I was not hoping, I would say, but I knew that with Thanksgiving and holidays coming in, the number of COVID cases will rise. Again, not hoping for that, but yeah, that's the state we are in. People will travel, are meeting their families. It is happening that way. COVID cases are rising, and then again there's so much more closer. So Zoom is again going up, right? So that's where things are. Okay, guys, I need to drop. I am expecting some guests right now. So yeah, they're almost here. So thanks everyone for joining in. I hope I was able to help you guys one or the other way. Again, I'm just learning. So if I made mistakes, I wasn't clear enough. Sorry for that. And yeah, happy trading. Happy Thanksgiving, guys. Thank you. Thanks. Bye. I'll stop. Thanks. Thanks, guys. Thanks. Thanks. Bye. Thanks. Bye. Bye.